Hey traders, Raghee here, and in this recap video we're going to cover a couple of markets that basically these are the markets that you don't want to stand in the way of, and we're going to cover them right now, talk about the structure of these markets and why I think there is still some movement to the upside. So let's start off with the S&P. Now, quite frankly, the S&P comes after the NAS. I think a lot of people start off their analysis with what is the S&P doing, but in reality, unless financials and healthcare can override or even add to what's happening in tech, what we want to remember is that overall, the movement higher in tech is going to take the S&P with it, and if the S&P does not have the momentum, the support of the NASDAQ, it needs the support of financials and healthcare to help it go. If all three are moving, that's when you'll see the S&P overpower, outpace the scope and the speed of the NAS. All right, so I think there's a lot of folks that have been waiting and watching and looking for reasons like maybe Amazon, like maybe Intel, and what happened with semiconductors to see the NAS fall, to see the markets roll over. But I'm going to tell you all, there's a couple things to think about. Number one, liquidity is driving this market, not earnings. This market has overlooked two meh earnings seasons now. I mean, Q1 was nothing to write home about. Q2 so far has been a little bit better, perhaps, in some ways than Q1, but it's really been hit or miss, and it's really a stock to stock to stock assessment. So I can't say we've had blockbuster earnings. What we have had is blockbuster buybacks. When companies are buying back, heck, Costco just announced $4 billion in buybacks. So this is why we don't want to get in the way of these markets. It's the liquidity, it's the buybacks. Already well over $250 billion in buybacks so far in 2019, 800 and I believe $6 billion in buybacks in 2018. It doesn't matter what earnings are saying, gang. It doesn't matter what PE ratios and even data points. The bigger picture is we don't want to get in the way of these markets. Same thing with crude. A lot of folks asked me today, Rog, are we selling crude? And here's the thing. We had a nice, really, and I do mean it, we had a nice panic sell move today. I love a good panic sell because oftentimes those panic sells are going to lead us into buying opportunities, and that's exactly where crude oil landed us. Retesting the top line of the wave, selling off by over $3 today. That's an entire dollar to 80 cents greater than the 68% probability to the high. So that's a good exhaustive move when you look back on a 6-month historical type rhythm. And we're retesting the value area high of this year's point of control. So when we have retreated to the first standard deviation, which is where we are right now, this is how I decode whether or not the market's gone too far or just hasn't gone far enough. We are at a zone where, yes, we are very likely to start to find bidders as we go forward. So I'm not bailing on my bullishness in crude. It has served us well throughout the year. This is not a new buy here, gang. It's one of many, many buys that we've continued to take in this market since the end of January. So we're going to continue to roll with this. This is a political panic. Think about when we've seen political panics already. XLV. Political panic in this case meant Medicare for all. Political panic in this case meant the U.S. asking OPEC to do what they can about the price of crude to ramp up production. Something. Political panic. These are usually very easily fadeable moves, and that's exactly what we have here today. So there's also going to be opportunities to buy as the markets sink in names like XLE and XOP. So we're going to continue to watch these. I like XOP quite a bit. XLE is also on the watch list. So I'm bullish crude. I'm bullish the XLE at the point of control for the year. You see that white line right there? We're still well above the volume weighted average price. This is a market that is seeing a little bit of panic selling, but we're not seeing the big money flow bail on it quite yet. And speaking of big money flow, if you already don't know, I am doing a class on big money flow and the specific tools that I use to decode what institutions and big money flow, in other words, think hedge funds, think Fidelity, think what is going on oftentimes below the surface of the market when, for example, you've got a company's mouthpiece saying one thing on television, but their volume and price action saying something else. That is what we're talking about. How to spot trades beneath the market surface. I'm stoked to do this. It's happening tomorrow, actually in 19 hours. So if you haven't checked it out yet, it is at simplertrading.com/sonar. And we're going to be starting at 11 a.m. Eastern tomorrow. The indicators are included with the training. So you're paying for the training. The basic class is how do I anchor, how do I decode the big money flow, that volume and price that leaves the footprints that we can follow as traders. They can't hide their size. They sure do try, but they cannot, gang. And I'm going to show you how to decode that. That's tomorrow at 11 a.m. And you can check it out at simplertrading.com/sonar. Again, the training comes with the indicators. There's no separate charge for the indicators. Learn how I use these tools. We have live trading next Tuesday and Wednesday. Enjoy your weekends. I'll see you tomorrow at 11. And in the meanwhile, enjoy the rest of your day.